Good day, money masters, you legends. It's me, SJ, again. Today, I am going to explain stock markets, or more specifically, stock exchanges. If you've always wanted to know what a stock exchange is and how it works, this is the video I recommend. To understand it, you should also probably know what a stock is. So please check out my previous video where I explained what a stock is. But for today's video, stock exchanges, let's rock and roll. Let's be honest, it's not difficult to understand what a stock exchange is. It's really in the name. It is a place, and I'll explain that a bit more. It's a place where you can go with your cash and exchange your cash for stocks or shares. Same thing, different name. And again, when you hold a stock or a share, you can exchange your shares for cash. In other words, a stock exchange provides you with the opportunity and the mechanisms to buy and sell stocks. And to have a very clear understanding of how these stock exchanges work, I'm going to take you through a short history lesson of stock exchanges. These things have been around for a very long time. And I also want to tell you how they used to work, how they work today, so that you can see the difference and what role they fulfill in the financial services, specifically the savings and investment industry. So the oldest stock exchange in the world is said to be in Amsterdam, established in 1602. The oldest in Africa, in Egypt, 1883. And other noteworthy older stock exchanges, France, 1724, Italy, 1808, and Germany, 1820. And following on from that, the USA first stock exchange in the USA was established in 1790. In the UK, 1801, and where I'm from, 1887. Those Egyptians beat us by about 4 years, so well done to them. And now I want to tell you how stock exchanges used to work and how they work today. So I just mentioned that the first stock exchange in the UK was established in 1801. But as early as the late 1700s, there was actually an informal stock exchange in a coffee shop. And people got to know about this, so more and more people came to the coffee shop. Now, when I say more and more, we're not talking hundreds. We're talking maybe from 5 up to 15, up to maybe 25. Because in those days, there weren't as many companies, and there weren't as many people who could actually afford to own shares or stocks in a company. But it was established in a coffee shop, and people used to get together in the coffee shop, and they would talk about the shares they hold and see if there were other people who would either want to sell their shares so that they could buy them, or people who would be selling would be seeing if they could meet a willing buyer. And as these things grew over time, they got more and more established, as well as better and better regulated over time. Up to a point where there were more people that could afford to buy stocks and hold stocks, and they started issuing stock certificates or share certificates. That would be your proof of ownership. And you could take that certificate, you could sell all of them or part of them, and then let's say you sold all your shares, your certificate would be cancelled, and a new one would be issued to the new holder who bought those stocks from you. And over this period of time, there was also the emergence of what we call today stockbrokers. People and firms that are now regulated and licensed to place trades, buy and sell stocks on stock exchanges. So perhaps in the early rounds of stock exchanges in the 16th and 1700s, there were so few people who could afford to hold stocks that any one of those people could come to the coffee shop or later the larger building that was called a stock exchange and start exchanging or trading their stocks. But today, we have regulated and licensed stock exchanges, and we have regulated and licensed stockbrokers. And all the buying and selling every day on all the stock exchanges across the world are implemented, the buy and the sell decision is implemented by a stockbroker onto the stock exchange. That trade is then placed and executed. So today we've got very regulated stock exchanges, very regulated stockbrokers, and we don't have to ourselves go to a coffee shop or a building anymore to buy and sell stocks that we hold. In addition to that, as recently as around 30 years ago, this whole certificate, handing in your certificate or having to have proof of that you are the holder, the legal holder of a certain number of shares or stocks, that all changed also around 30 years ago. So today, all the stocks and stock certificates are actually kept electronically, and almost all trading is done electronically, which then also gave rise over the last number of years to online trading through either the internet or an app. So today it is really easy to buy and sell what we call listed stocks. And a listed stock is the stocks or the shares of a company that is listed on the stock exchange, and that is easy for you and me to either through an app or a phone call or the internet to place a buy and sell order. And that is the benefit of stock exchanges. Stock exchanges make it easy for us to trade in shares or trade in stocks. Imagine you want to sell your house. Then you've got to make the house look nice. You've got to appoint perhaps a property agent. They have to put that house on the market. And depending on how well things are going in your neighborhood and the economy and so forth, it can take anything from a number of days and weeks up to months and sometimes even a year or more to sell your property. But you can log on any time that the stock exchange is open. Let's assume you are trading online. And you can place a trade to sell a stock or buy a stock. And it's as easy as that. So that is the benefit of stock exchanges. The stock exchanges make it easy for us to buy and sell stocks. And there you've got it. That's what a stock exchange is. It's a marketplace where you can come and exchange money for shares or shares for money. And it's all done today. Almost all of it is done online. I hope you enjoyed it. In the next video, I'm going to explain now the companies that are available, the stocks of the companies that are available for buying and selling on stock exchanges. How they make up a stock index. What is a stock index? What does it mean when people say the index went up or down? Or the market went up or down, or the market is up 10% over the last year, or perhaps like in 2022, the market is down 19%. What does that mean? How is it calculated? So that you can understand then what is a stock. You now understand how stocks trade on a stock exchange. And then we are going to move in the next video to stock indexes or indices, and then on to from there exchange traded funds, or how the stocks that are traded on the index is used by unit trust or mutual fund managers. I look forward to bring that to you. Thanks for sticking with me through this video. You are a Money Master legend for sticking with me to the end. And as always, remember, wherever you see this logo, this is the subscribe logo to the channel. You can also follow me on Twitter at MoneyMasterSJ is my Twitter handle. Thanks for today. I look forward to see you in the next one. Cheers.